Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. This is Aaron Edwards with Santos Springs. It is September 9th, 2025, and hopefully we're getting close to harvest lows, or maybe they're in the rearview mirror. That's the big question. We're going to talk a little bit about how much market pressure is still ahead of us, how much is behind us. No one has a crystal ball, but there's some interesting things to look at. So we're going to jump into all that. Before we do that, though, we always want to start with the recommendation, that call to action. This week was tough because I almost want to buy corn and beans, right? I'm thinking it's about time, but I'm going to go with no action recommended again this week. That's one that I kind of hope I don't regret. I hope we don't miss out on it if we get a rally to go over it. But I'll walk you through the thought process here when we go jump into the analysis. Before we dig into the position of the funds and all that good stuff with the of the corn and the bean market, I just wanted to kind of take two steps back and just look at the nearby corn and soybean futures and just kind of just get a big picture glance at the market. A lot of times we can get accustomed to just looking at a ticker on the screen. So let me go ahead and pull up a marker, and let's go with green. All right. So we're going to start talking about the corn. This is the nearby contract, so it's always the contract that's closest to expire. Right now we would be in September. And I just wanted to kind of go, it's a little bit more than 12 months. Let me get up there in the corner. There we go. It's a little bit more than 12 months. So it's kind of going back to June of last year through right now we're in September of this year. Again, we've all lived these markets, so it's not necessarily new. There was that great opportunity in January, February. We didn't really get a spring rally. Usually the spring rally would be at least as tall as the previous one. That was a very poor excuse for a spring rally, that tiny little bump in April. And now we're down here close to harvest. And let's look here at this 380 mark. That was basically the low from last year on the nearby 380. We didn't quite come down to the lows from last year. That price came tail end of August. So far, the low has come in mid-August this year, so compared to last year. And then we got really a pretty good rally. Went up, and then down, and then it took off, right? So should we be buying, right? Is this market due oh man, we should have bought the August lows, coulda, shoulda, woulda. That's a point for me that I'm cautious about, because sometimes, it wasn't last year, sometimes this August dip is just a huge head fake, and then you calibrate down to a lower price level. Around harvest and harvest lows, I would rather be late to the game but be on the right side of it than try to catch a falling knife. And then we did get that rally, but if we look at it, okay, there's the low of 380, but let's look at opportunities. Let's say 380, okay, but let's look at opportunities closer to 410. So this is the 410 mark. I missed that 380 buy, and that, again, that's on the nearby, right? There were quite a few opportunities around that 410 mark. You didn't miss out very much around that 410 mark. Yeah, it rallied up, but then it came right back down, and you had another shot at buying in around the 410. Will this year repeat? Maybe, maybe not. Maybe this market just takes off, and that would be a point of, man, I wish it had just jumped in. Typically speaking, though, I would expect somewhat of sideways motion, and if we rally, it goes up and then it comes back down. We'll talk about that more specifically when we get to the the December corn contract. And then the other thing that I wanted to point out on this corn is we did get a rally. It wasn't a spring rally, but we did get a rally, and so that there are opportunities that come, and we very likely might get another opportunity this year. I think most farmers can't make these numbers work very well on corn, and I think we probably, even in bad years, you usually get one or two shots at a profitable price. Soybeans is a little bit different story. Switch colors there to black, and then pull that over to the side. There we go. So if we want to look here at this 1080 mark, again, this is the nearby contract. It's a little bit different if you look contract by contract. That 1080, that's been a pretty solid cap. And then we've basically had kind of four major dips in this market. If you want to be real optimistic, you could say that we're having higher lows. So we're getting some degree of support there. And if you want to be optimistic, yeah, maybe we can say that that's friendly. Another way to think about it is think about like value area and trade. So let's just draw this 980 here. Anytime we've been under 980, that's been a buy. So is there downward pressure? Sure, but those dips down, those have been buying opportunities. And if we want to think of kind of volume of trade or amount of time that it spent in a price range, we can kind of say, okay, there was a big chunk here of time that was spent, that would be kind of between 980 and 1020. And then there was a big chunk of time spent basically in here, which would be 1040. Let's see if it'll make a box. Nah, I drew it too. It was a little sloppy. Let's try that again. Basically 1040 to 1080. And then we had a value area in here and a value area in here. And now we're kind of in this value area. So are we going to get, is the next value area going to be here, or is the next value area going to be here? Or is there a chance that we actually break out, either the upside or the downside, we actually break out of this range? And then we'll talk a little bit about the corn and soybean markets specifically, but before we do that, always want that action, no action recommended. Maybe we should be buying corn, maybe we should be buying beans. I'll tell you a few reasons why I'm kind of holding off on that when we get into the analysis. But we just want to remember the philosophy. It starts with a portfolio. Where are you at on your sales? What do you need to do? Based on that, we look at seasonals, funds, technicals. That gives us a call to action, and then we can execute. And for this week, no action recommended. Now let's talk about corn. I'm going to get this marker over here, we'll do it in green. For the first time over here, the corn market is, it has a long position, the funds are still sold, but they don't have a large enough sold position to justify jumping in on the buy side. So it's technically neutral. That's encouraging from the corn, and they've really reduced. It's not necessarily that corn is bullish. Funds aren't bought corn. They haven't bought it, but there's quite a bit less conviction on the bearishness. They're stepping back from their sold positions. And what that looks like on the December corn, we talked about kind of the big picture nearby, but let's look specifically at December corn, which is really where the attention is. We have that big, make that black and pull it to the side. We had that big sell, came off of this, a tiny little bump in April, and then really it's just been pressured. It's been an ugly, ugly corn trade. How optimistic can we be on the upside of this corn market? That's the big question. December corn, how friendly can we be? All right, December corn. Here's what I think we need to be watching. Number one, this is the 20-day moving average, and it's as long as we trade above it, it's coming up, and it's probably going to come meet the 200-day moving average. That's the tendency. I think it's very likely that if we have a friendly market, we basically stay within this wedge. And the reason I'm hesitant about buying today is because I think that there's a decent shot that we'll lose a dime, which isn't much, but I think there's a decent shot we'll lose a dime or anywhere from 5 to 10 cents out of this market. Because many, many times around the USDA report, which is Friday, we're trading at the 20-day moving average. Basically, the market action leading up to a USDA report, they're like, let's just stay at the 20-day moving average and we'll pick a direction afterwards. So if the only loss were, okay, we're going to trade down to the 20-day moving average, I'd probably say, hey, set your sights on buying something under 420 and you're good. The problem is if we come down here, and this is the almost like the sole reason I'm not recommending buying it. If we come down here, we're trading on Friday, not even that many trading sessions, right? 1, 2, 3, 4, we trade something like that, and then we're right there. Okay, we're trading at the 20-day moving average, and we get a bearish report. How low could it go? And my hunch is we probably go down, and we probably test those August lows one more time. So I kind of hate to step in front of it if it is a falling knife and you buy it and then you blink and you're down 30 cents, which very likely could happen coming into next week. And then the flip side that we have to say is, well, what if we hold our ground, which is probably the most likely, is that we somewhat hold our ground and trade up. Will we have other opportunities to buy beans around 420? And if we go back to that chart, yeah, I think probably throughout harvest, there will be multiple opportunities to buy corn, buy corn between this 410 and 420 mark. I would guess that there's going to be multiple opportunities to scoop up corn in that price range. I would be surprised if there's not, if this is just, we missed it because, markets just went up. So there's the possibility that if we don't get a friendly or a neutral report on Friday, corn market gets punched in the gut, we go down and test the August lows. If we do and we hold, that's a double bottom. That's a real tempting buy, right? Because great, we're there. Even if we make it through the report, we're still in an uptrend. Oh man, we got a friendly report. I should have bought it. Okay, chances are between 410 and 420, there will be other opportunities to scoop up some corn. That's why I chose to not recommend any type of re-ownership or long position on corn this week. And if we shift gears to soybeans, on the soybean market, it's interesting. We've kind of been watching this yo-yo, right? Sold, almost neutral, but a little bit sold. Oh, let's buy beans now. Let's not buy too many beans. Goes up, comes down, goes up. And the soybean market, it just can't decide which way it wants to go. Part of me, if we look at the chart, let me get the black marker here. If we look at the chart, part of me is like, this is a must buy because we are right at the 200-day moving average. We just had this golden cross right here, and we are coming into South America's weather scare. If they have delayed planting, soybeans can absolutely skyrocket. If we have hiccups out of South America, the price isn't really profitable for most farms. We might not get selling pressure. We get that snowball rolling. We could get a decent rally in this bean market. We have to buy this 200-day moving average. That's the bullish Aaron sentiment is that. The bearish fear is, oh no, this doesn't hold, and then we're right back down here testing these lows all over again under $10, because the last time we got a golden cross, that's exactly what happened. It went up and then it came down to these levels and then we bounced again. And how bullish can we really be if every single time that we get high, that's the 1070 mark, that's the 1060 mark. Every time we get anywhere in this area, 1060, 1070 on the Nove, we get sellers that are saying, yo, I got to sell this. So how bullish can we really be? Here's kind of, I gave you the bullish and the bearish. Here's my actual opinion, so to speak. I am somewhat friendly soybeans, and I think we do have a shot at actually making a rally here. But I would be surprised if the market kind of plays its hand before Friday. I would be surprised if it just takes off to the upside before Friday, or whether it's going to go up or down. I think it's more likely that it kind of it tips one way or the other, either on Friday or first part of next week when we have the report past us. And what will happen next week? Oh, we got the USDA report past us. They're talking about planting in Brazil. And then we can already start looking at weather forecasts. So we're probably 2 to 3 weeks away from weather in Brazil really mattering. But if there's no rain forecasted and people are talking about delayed planting, that news could creep in as early as next week, although I expect it to be 2 or 3 weeks away. We will just know quite a bit more about this market a week from now. So why step in front of it at a support? Just because we're trying to guess. And, we don't really want to do much guesswork. Either if we're going to get punched in the gut, we're probably going to come down and test these lows again. And that might be a potential opportunity to take us down the long side. And if we rally, it's kind of the same thing as corn. Will we get a runaway rally? Well, I don't know. Planting season in Brazil is pretty long. We probably have 6 to 8 weeks before that's completely baked in. Markets typically don't go straight up. We'll have combines rolling here in the US. If we get rallies, at least initially, farmers are probably going to sell into them again. So I don't think it's going to be a runaway rally. I would be surprised if it's a runaway rally and we just missed out on it. So we might as well kick the can down the road one more week and digest the information from the USDA report, start looking at weather forecasts. Now, next week, moving forward, that's for me when kind of the mindset shifts from, speaking of soybeans, from northern hemisphere to southern hemisphere, because a lot of regions there can already start planting around the 15th of September. So next week, we're already is there planting? Is there not planting? What does the 10-day forecast look like? Will they be able to plant in September? And here's what happens if they delay their soybean planting, it tightens their window on double crop corn. So soybeans is the big headline, but it's potentially bullish corn as well, depending on how their planting season goes. Again, that's probably 2 to 3 weeks from now. And very likely we want to be thinking about being long, depending on, getting set up. We're not going to make that move this week. I'm not recommending it. Let's just stay on the sidelines one more week, let the market play its hand, and we'll react accordingly. Let me close this down, and then we want to just kind of do that recap, the summary, and go from there. So corn. Oh, let me share the screen. There we go. We're looking at the market in Chicago. Corn is seasonally a buy. Soybeans are seasonally a buy. Managed money is sold for corn, but technically neutral. And they're a little bit long for beans, but technically neutral. Both corn is in an uptrend, and beans are below the 20-day moving average. So I'm going to say that's a downtrend. I use the 20-day moving average to talk about trend, but they are above the 200-day moving average. So yes, it is under the 20-day, so it is a downtrend, but it's above the 200-day moving average. So I'm not. If this support holds, that's probably good news for the general price level of soybeans. If we can make it through Friday's report, first part of next week, and stay above the 200-day moving average, that's good news. Basis levels are calibrating down to harvest lows. The corn market had a nice rally off of the August lows. And has held its ground so far. I expect sideways to down trade the rest of this week, as we will likely be trading near the 20-day moving average for Friday's USDA report. The soybean market fell through the 20-day moving average, but so far is holding support at the 200-day moving average. Price level over the next few months will largely be determined by South American weather, but this week the focus is still on the USDA report that will come out on Friday. Just to wrap it up, markets are poised in a way that I'm cautiously optimistic. And what I mean by that is if we get just absolutely hammered down, coming out of this report on Friday, if it's absolutely just a sell-off, right? Just really just gets punished. This is a time of year where my gut reaction is that that's a buy opportunity, that's a V recovery type of a market, that's a market that will bounce back. And what I think is more likely is that it'll not be a very dramatic report, and we will kind of pick a direction on the other side of this report. And if I had to make a guess, that's going to either be the most likely scenario, in my opinion, is very likely a sideways to up market. And it sure would be nice to get kind of the wind in our sails on prices and to see prices gradually climbing up. So this is a time I would say, make sure if you're not handy with a hedge count, reach out, ask me questions. We can get you set up. Anyhow, if you have questions about reownership, doubts about reownership, then I want to make sure that you got your knives sharpened and you're ready to go if we have to get rid of some old crop bushels and keep some upside exposure one way or another. So just want to make sure that we're ready for that, not this week, but just operationally before stuff gets real busy with harvest. We want to be ready to get, hit the ground running if we need to. Hope you have a great rest of your day, great rest of your week. Be safe.